and welcome to another episode of Doubl3Tap. Today we are joined by Richard Kim, the CEO and founder of Zero Edge. Hello, Richard. How are you?
Hey guys, how you doing?
Good. Yeah, happy to have you on. We're going to be chatting all about fully on-chain games. But before that, disclaimers out the way. This podcast is for informational and entertainment purposes only. It's not financial advice. The opinions shared by Alex and I are our own, and we may have investments in some of the projects or assets discussed throughout the show. That out the way, Richard, what games are you currently playing?
I'm playing a lot of casino games, which is no surprise. We'll obviously get into the meat of it, but a lot of Zero Edge is premised on this idea of what happens if you suddenly create a safe space, right? Because our whole lives we've been told, don't play casino games because the house always wins, right? So aside from this class of extreme gamblers on the one end, and then people who go to a casino but like don't want to lose more than $100, so limit their playtime intentionally. For me, like just to answer the question, there's a whole host of casino games I've never played because I know I suck at them and I don't want to lose money for playing in the suboptimal way. And the interesting question is, if you essentially create an application that reveals to the user the optimal way of playing any games, but actually lets them bet on the dumb bets because you're going to get refunded that edge. Think about what's suddenly possible in these games, right? Like the kind of optimal way of playing these games. It's basically you go for maximum entertainment instead of like just focusing exclusively on the right way to play a game. And I think that's very exciting.
Do you have a particular favorite, and do you lean more towards like the skill-based games like poker versus like just pure dopamine slots?
Yeah. I mean, one of my favorite things to think about is this continuum of skill-based versus luck-based, right? And I think one of the most interesting things I've learned in the course of building Zero Edge is this idea that, traditionally we think of games as like a single continuum of luck versus skill. But actually, that's completely the wrong way of looking at things, because actually the right way is to view these things as an XY plane, right? Where luck is one axis and skill is the other. And so you can actually have four quadrants of things. You can have high luck, high skill, and then all the other variants of that, right? And it's that like high luck, high skill segment that I think is actually the most fun, particularly where money is involved, because if you have a high skill, low luck game, and you wager in it and you lose, you're likely to say, oh, I suck at this game. I'm not going to play again, right? There's sharks out there. Obvious examples being Tetris. Whereas if when you look at the mobile free-to-play space and this segment that does really well of skill-based gaming, what you find is the games that do most well, like games like skill-based bingo, or games that probably are like 55% skill and 45% luck, but they give the user the perception of agency, right? And so they feel like games that are actually like 95% skill, 5% luck, right? And that feeling of, oh, if I only did this one thing differently, I would have won that game. That's the type of stuff that gets the user to come back over and over.
One of the things that we love about Zero Edge is just the way you're thinking about durable incentive design. I think one thing that Jacqueline and I like to talk about is kind of reverse engineering the incentives and mapping that to specific types of players. One thing that we found when we've looked at poker and casino platforms is just this concept of durability in terms of how do you sustainably feed like fish or bring new players into the ecosystem where sharks are, inevitably have the edge because they put that time in. So just kind of off the top, I'm curious, like, what do you think it is about crypto or Web3 or putting certain aspects of these casino games on chain that makes them more sustainable?
So I'd say that the vast majority of games I've seen in Web3 and casino style gameplay is actually not sustainable in Web3. I have this analogy that most people have used crypto as another way to build a company. In other words, like another way of financing development that's like de facto equity playing off of this almost regulatory arbitrage between tokens and equity, but with the downside that the tokens don't actually do anything, or they're very tangential to the value accrual mechanisms. So what if we reframed the thinking away from crypto as a financing source and as a way to just, for example, target user acquisition through this thing that people get hype about, but eventually follows this Ponzi-like path? What if we moved away from that to thinking more along the lines of wanting to build a country, right? Because if you think of the business model of a country, it's to grow GDP and tax it, basically, right? And to grow GDP, you need a lot of organic engagement and the production of goods and services, which in the case of a real country is like physical and shops and all these things. But in the case of a digital economy, it's like basically GMV, right? Transacted in these games. That's ultimately a much healthier way of looking at things than the kind of Web 2.5 style of, oh, like let's run a game studio where we, the developer, are going to get fiat in-app purchases or sell NFTs, and we're going to monetize that. And yes, we've put something on chain, but it's still fundamentally like a company business model. And so I think what the space requires is actually a pivot towards the country business model. What I find so fascinating about the country business model is that if you've really captivated a community and have built the kind of long-term sustainable mechanism design around utility of that currency. So the whole thesis of Zero Edge is instead of profiting on the player in the form of charging a 1%, 2% edge or rake on every transaction and ultimately destroying the player base if they play long enough, what if we set that to zero? And actually all tried to profit together as a community in the form of value accrual to the tokens, both on the game side and the co-op side. And we can get into details on that.
Yeah, I'd love for you to maybe elaborate a little bit on like how maybe mechanically you're doing that. So like what exactly are you tokenizing? What are maybe the different assets you're using?
Yeah. So I'd say one general token model we've seen a lot over the last 5 years is kind of like emissions-based incentives. And I think fundamentally, the only sustainable business model, I think, in the long run, if you're being like very realistic about things, is just to assume that bots are going to arbitrage away any positive expected return of playing any open economy game, whether that's Axie Infinity, whether that's Craps, whether that's an RPG, kind of doesn't matter in a sense. Like if there is excess return, in the long run, it should be arbitraged away. Now, I know locally and in the short run, that's not true, but like in the long run, I think it's way more true than not, right? So that's kind of like my working assumption of sustainability, which is, I think if you're operating a system that has as its pull to the user, hey, come play to earn, I just don't think that's sustainable for exactly this reason. But if instead the system is premised on the idea of your expected value of playing this game is zero. Zero is actually the only long-term sustainable equilibrium, in my opinion, for money games and open economy / Web3 games. Because if it's negative, you're going to eventually kill your community. And I don't think your token that your community is associated with can accrue long-term value while you're killing your players. There's this mind-blowing statistic of if you walk into a casino with $100 trillion and you bet on red, okay, and you only leave the casino if you're either up $100, betting $1 at a time, or down 100 trillion, what do you think is the more likely outcome, right? Like if you just think about it in a second, you're like, of course, up 100. But actually, you have a 99.9935% chance of losing $100 trillion because of the laws of averages and statistics, right? It's actually like crazy, right? Like in a very real sense, like the casino industry should actually be like just as illegal as taking heroin. But the point here is like, I've a lot of the reason personally, like I'm building Zero Edge is because I am a gambler, right? I've suffered from a lot of like the emotional damage of having gambled. And like, that's why I'm hell bent on this personal mission to almost build the anti-casino. Because I think, I don't come at this with this like moral judgment on gamblers. In fact, that's exactly the target audience, um, to appeal to these players and say it's okay to bet money on things, right? But how can we create the mechanisms so that you, in the course of playing these games and experiencing the thrill of economic volatility, um, don't blow yourself up, right? And I think a lot of this kind of moral judgment that gets passed on gamblers, it's because of bad mechanism design. And to be clear, I'm not saying zero edge is going to solve this problem, right? Zero edge is not going to like bring back the $2 million that you lost gambling. But what it is going to do is create a safe space where not just hardcore gamblers, but all the people who don't gamble because they're quote too smart to be a sucker to the house can now actually play these games, and the long-term EV of them is zero, right? And so this EV zero thing, it sounds like very abstract, very like economic, but actually it's like a conditioned precedent to so many other things.
So could you maybe elaborate on that? Like what's the, like how exactly are you getting to this zero EV state over the long term?
Yeah,
And like, how are
yeah,
you, how are you kind of like tokenizing different aspects of,
yeah.
yeah.
So this is a continued evolution in product design. We're hoping to release our first game by the end of July, early August, which is going to be essentially Zero Edge Craps. Craps is my favorite casino game by far. It's the most social. It's, I think, the best suited for a fully on-chain environment for a whole host of reasons we can get into. Um, but one way to do it would be to like proxy what is the house edge through things like notional volumes bet, right? And that's originally where we were going to go, is just like, okay, at the end of every week, tally up um, how much the casino has accumulated of the native token, right? Because in my system, the casino is an autonomous casino in the form of a smart contract that's owned by everyone and no one, right? And it basically mints and burns tokens like as needed to pay out players or receive from players. So, given that these games have some embedded edge, right? What's interesting is you can calculate at a bet level what the expected loss is for every action you take. Okay. So instead of just being like, okay, here's craps or here's blackjack, you play, and based on how much you bet, we'll give you a rebate if there is a rebate. In other words, if the house has accumulated some edge on the week. I came to this epiphany like a few days ago that actually you can calculate the house edge on a per bet basis, which is actually mind blowing, right? Because the way to present this to the user is every time they make a bet, there's like a genius tooltip that's like hidden there in the corner. You can expose it if you want. It says the edge on this bet is X, like, but it's okay because you're going to get it back, right? And at the end of the day, you can collect all of the edge, which gets to the point about actually expanding the gameplay of these games, right? Because it's a lot of really fun bets you can make in craps that are stupid bets to make, like one rolls, like hard ways bets, all these things that we've been told not to do because the optimal way to reduce the edge to 0.8% in craps is to bet on don't pass and max odds bets. And that's fun, but like it's actually even more fun to bet on all the stupid things as well.
So
Yep.
I guess maybe could you just clarify, like,
Yeah.
really remove the risk of this game, and isn't it just being
No.
reallocated to other parties?
So there's a very important distinction here that I'm drawing, which is there's a difference between rebating 100% of house edge, such that the long-term expected value, if you bet small enough per bet, is zero, right? In other words, if I have 100 chips and I go all in with 100 chips, I can lose 100 chips. But if I have 100 chips and I bet 0.1 chips each bet, in my system, you will end up with 100 chips with almost 100% certainty in the long, right? And so like that distinction, I think is the key one I'm trying to draw out. Um, and I think preserving that risk of loss is very, very critical.
So just to clarify, as you essentially as activity increases, right, from the player perspective, there's risk, but if they play it right, there's incredibly low risk to no risk. And then the platform it has a take rate based on like transactions.
Just to be more precise on transactions, it doesn't tax betting in game. What it taxes is swap fees when you convert, the native token. Let's call it chips for the first game versus USDT. Now, I had originally envisioned a model where you would tax something like 3% on both the inflow and the outflow. But I actually think a more interesting model is one where you tax 0% on the inflow and something like 5 to 10% on the outflow, right? Because then you could actually create a system where so long as you didn't exit, your long-term EV is literally zero, ignoring gas costs, right? I think that's a super desirable property of a game ecosystem. Like you see these crazy complicated Web3 gaming token models. At some point, I became allergic to them and largely stopped paying attention to the space. That's what your guys' job is. But it's like, at the end of the day, when you strip away all the BS, like there's just one very simple question. Who the hell is buying these tokens, right? Like, and why? Because if the answer is, oh, because like some gaming influencer told me to, and I think it's going to be hype and this NFT drop, blah, blah, blah. Like, that's the wrong answer, right? The right answer is, oh, I need these tokens so I can play with them in the game. And there's a lot of people who want to play this game. Like the token should go up if it has the right properties. So what do I mean by right properties? I mean something that's not emissions incentive driven. Okay, so in my system, I think what is very important is to have a free to play fund. I can't actually name a single game after 6 years where it's a free to play, an end-to-end free to play Web3 game. End-to-end meaning no gas, like sponsored gas, and no purchase required on the token, where the token is actually critical to the gameplay. Like, and that's crazy to me. I think the last point I'll say on this is I've been thinking a lot about the initial distribution conditions of the token. If you're a player buying this token because you want to play the game, and then like some early investor dumps a huge portion of the supply when you just bought it, you're like, what the hell, right? Like, why is this huge source of supply like competing with my utility just to bet these chips in the game? And so what I've done in my system is I've separated the ownership of the network token, which is RNG and this contract called Faith that I can describe, versus the game tokens, right? And the game tokens, my mental model for them is that the closer we get to 100% fair launch type of distribution, the healthier the market structure of that token is going to be. Instead of trying to put all those functions in one token, like just create a system where the game tokens are fair launched. They don't even need to be airdropped to the owners of the autonomous casino. That's the model I was originally thinking about and still may do a portion of, but I think that suffers from some of the same mixing the sources of market structure. So why don't we instead keep the game tokens as fair launched as possible and just have 100% of the ownership of that community LP position together with the ongoing dividends after your desired liquidity thresholds have been achieved, have that all be owned by the kind of co-op owners, right? Like, so that's the mental model I'm going for, where my co-op token is the RNG token, right? And through RNG, you should view that as like the hub in a hub and spoke system where each of the spokes are games, right? And these games may in turn have their own tokens like chips, or they may not have a token. I think so long as we keep true to the principle that 100% of the economics of the system go back to the RNG/faith token holders, that's a really important aspect of the system. I've mentioned faith a few times. Let me just quickly explain that distinction. So we have this fungible token RNG, right? But the problem with fungible tokens is like you can trade it at any time. And what you typically see in token models these days is a system where it's like 6 to 12 to 24, 36 month type of vest, right? But what if we just scrap that and said, okay, the vest is up to the token holder. But depending on how long you vest for, your proportional ownership of the economics of the system are going to change dramatically, right? I think this is something we haven't really seen a lot of experimentation around, and we should, because I think a system that recycles out inactive players in favor of active players and short-term believers in favor of long-term believers, these are all desirable properties to have if what you're trying to do is build a country.
You have this split between players who simply buy chips, play the game. If they could, go full degen and risk it all, or they could, just have fun in these highly social games and never, virtually never lose. Then you have this meta layer that's the cooperative, that is essentially gaining upside to the growth of the ecosystem GDP. As it grows bigger, they benefit more. And is there any overlap between that? Like, is there a pathway for later entrants who just want to come in and enjoy the game? And now that they see there's this VIP club over there that's making tons of money every time a new game launches, is there a pathway for these users to kind of reach that if they don't necessarily have the capital to enter?
Yeah, so very good question on both so I look at it separately for both the game tokens and the RNG token. So let's handle each in turn, right? So the beauty of money games, right, is people think in dollars or whatever your local currency is as a numeraire, right? So meaning if I want to bet like $100 equivalent in craps, I'm going to buy whatever number of chips gets me $100 of tokens, right? And as a new player, whether the price of chips is 10 cents, $1, $10, $100 actually doesn't matter. Like if I were going to draw a Web3 gaming trilemma, it would be the interests of the developer, the speculator, and the player. And for most Web3 games, it's actually impossible to balance the interests of all three. The interesting thing, though, about money games is the speculators still have their upside. It's like, imagine if I could buy V-Bucks and V-Bucks in Fortnite were a floating currency and it was a stupidly simple token model for V-Bucks where there's only 1 million V-Bucks, okay, in 2017, and you bought a bunch of V-Bucks. But the dollar price of skins is always $20, okay, such that you require a smaller and smaller and smaller amount of V-Bucks as the price goes up to buy a skin, okay? Like the beauty of that system is you give speculators upside. New players are always paying $20, and the developer can participate in that economy in the form of getting, these tokens and being aligned with the ecosystem. So I think this model solves that at the game token level. Now at the RNG level, I think one of the reasons I've come up with this faith construct of like hard staking your RNG and getting a variable amount of faith, which again represents the economic and ownership in the co-op and itself, is I wanted to provide a way for new entrants who are long-term believers to buy 1 unit of RNG, and if they stake for say 36 months, get a massive amount of faith off of just 1 unit of RNG. Whereas if I have 1 unit of RNG and I stake it for 1 month, I get, let's say, 1 faith. For me, I wanted to create a token that I've never had to sell. So like I have the luxury of being able to design what I want in this thing. Like this whole zero edge thing is like a product of like where my crazy head goes. And like, to me, the best outcome would be I max stake my RNG for maximum faith and I get the maximum percentage of the ecosystem that's spinning off enough yield over time that I literally never have to sell these tokens. The one thing I'm wary of is excessive complexity, right? Because this question of how do you actually distribute 100% of on-chain economics to the ecosystem without that thing being deemed a security. Like I was a lawyer for 6 years and I started my career in derivatives and securities regulation. And so I think the big unfulfilled promise of crypto is the fact that like everyone's so terrified that their token's a security that they've ended up creating useless tokens. Like the way my mental model for this is if this is a country, then each of the players and participants in my ecosystem, they're like workers in a co-op. So in this case, you're not relying primarily on the efforts of a promoter to get a return the same way you would, like if I give you my money and you go invest it in some yield farm or whatever. Here, everything is from my own actions, whether playing the game, whether staking, whether like participating. We haven't talked so much about the social elements of this, but in the fully on-chain gaming space, most of what you see is premised on this idea that composability is the most interesting property of all the logic in a state of a game being fully on-chain. This is something I actually disagree with, not in terms of the long run, but in the short run. Like I think UGC ecosystems like Roblox demonstrate how hard it is to get to the point where composability is interesting. For me, like what's much more interesting as a primitive is trustless escrow day one. The idea that an autonomous casino can do all of these self-balancing things and you don't have to trust anyone. What that actually enables is a bunch of second and third order consequences that I myself am still kind of grappling with the consequences of. Like just to give you one example, imagine in Web2 land, I told you, hey Alex, can you lend me like $100,000 because I want to go to the casino and go see how I do. You'd be like, no, right? But the interesting thing in the say fully on-chain craps world is, let's say I have a balance of chips, okay, and I want to essentially create a lending market for people to gamble, okay, and the collateral in this case is a profit share of the borrower's profits, which is a function of how much chips they have and the percentage profit share they're willing to lend out. And on the basis of that, you could like essentially stack rank a lending market for people who want to like gross up their chips balances so they can bet more, right? Like that's super interesting if you think about it, right? In other words, where the collateral is actually the play itself and a profit share in the play. In other words, like what new social interactions are made possible because you don't need to trust people. And I think like that's ultimately way underexplored for all the talk about Web3 social. It's to me less about ownership and like, you know, making social posts NFTs or whatever, and much more about letting people do the things that they would like to do but can't because trust is a barrier in the real world.
Yeah, I think there's a lot to like about the system, to be honest. And ultimately, it comes down to the games, right? Like execution on the games and getting people to participate and enjoy that. But with that, that brings us just about to the end of the show. Had a really good chat talking about companies versus countries, the anti-casino, zero EV, and short-term versus long-term believers. Yeah, Richard, it's been great, man. Thank you for your time.
Yeah, looking forward to starting to build out a community. I think starting from July, we'll go out there, you know, start bringing people into our community, getting the initial group to like play test this thing on launch. And instead of doing like, I'm not going to do some crazy long points campaign. I'm actually much more, let's release a token, let's get some real world data, see how this stuff performs. So hopefully we start building that up soon.
The content of this video is intended for informational purposes only and should not be considered as investment advice. The views shared by Alex and I are our own, and we may hold investments in some of the companies or digital assets featured in the video.